Make sure I don't put your face on the video.
Uh-oh.
That's okay. I think we are good to go. I think we have people in here now. So we're gonna start our risk management stream. So whenever you're ready, good sir, the floor is all yours. You got I'll let you handle it any way you want to handle it. If it's questions and stuff like that, so I'll let you give the introduction and everything, and you can go for it now.
All right, cool. Awesome. Just want to do a sound check. Everybody hear me okay? It's not too harsh, not too low. I am okay, so I'm going to go through this really, really quickly. Not really quickly, but I'm trying to get through this. I know this is not everybody's favorite subject, and so I just want to make sure that I don't bore people to tears with this and I don't talk too much because I have a tendency to do that. And so feel free to interrupt me. I am not going to monitor the chat. So if there's someone out there that can voice questions at the end, I would appreciate it. Let's get through this.
I got you. If there's any questions, I got you on that. So
All right, let's wait till the end. I mean, you can load your questions now and then we can go through them at the end. But let me get through the slide presentation fairly quickly so we don't lose people's attention,
sounds good.
including my own. All right, great. All right, cool. I'm so happy to be here. Thank you very much for putting this together, Jay-Z, and thank you very much for inviting me to this incredible server. I mean, it's there's nothing better than there's no better place to be, honestly, and yeah. So I've been at this for a long time, so feel free to ask me anything that you want. I don't know if I'll be able to answer it, but maybe some of y'all in the room can chime in if I seem to struggle with something or there's some math question that I'm not able to calculate. But I'm gonna be really light on the math today. I just want to go over some concepts. So uh, turn off all your other noise that's in your room. Try to blanket everything else in the room for a minute, just so you can concentrate on this and focus in. I'm gonna take about 10 or 15 minutes and let's get started. So this is not financial advice. Obviously, this is trading is extremely risky, and you could lose all your money. And trust me, I have. I've made a fortune and I've lost a fortune. So it's easy. It's easy to do if you don't take the right steps. And notice what you're hearing right now may not be what you want to hear. Uh, notice that when you're listening to this, that your brain has a tendency to sort of pop off in other directions. So just notice that, and then try to come back to the conversation. Listen to my voice, and consider that risk management is 99% psychological. Okay, just let that sink in. So what's the other 1%? We don't know. Well, it's executive function, right? It's making decision to buy or sell, or not, or sit on your hands. So it's all about patience, discipline, and execution. Patience in trading is a discipline to wait for high probability setups. Period. These high probability setups are going to align with your trading plan rather than making impulsive decisions based on fear and missing FOMO, basically, or emotional reactions. It involves resisting the urge to chase every opportunity. That's me. Pushing trades, forcing trades, right? We all do that. Allowing trades to develop while also having the discipline to wait for the right entry and know when to exit position is really what we're going to focus on. Mitigating risk. Our brains may not be wired for risk management. In fact, I know for a fact that mine is not wired for risk management. We're mostly just working to avoid pain and also attain pleasure, of course, and survive. That's the lizard brain working. So we need to pay attention to that and understand what's going on and then switch to risk management and eliminating risk. Not entirely, but it just involves managing it wisely through a defined trading plan. Principles of risk management. What is risk management? Understanding your threshold of pain. That's what it is. It's risk reduction. Obtaining and proving an edge exists with durability. That's the very first thing you want to do is find an edge and then test it. Make sure that it lasts because anything works sometimes. And so you really want to make sure that this edge is going to last through all different types of markets, 365 days at least. I mean, you can basically look at it for 6 months and you can look at 500 trades and then the market changes and it doesn't work anymore. So it's a long-term project. So once you find your edge, then you want to implement risk management, good risk management, which means that you're gonna write a business plan. The idea here is to limit your loss while you're learning, especially. You have to accept that loss is part of the game. So trading discipline is the ability to consistently follow a pre-established trading plan and rules rather than acting on emotions like fear or greed. It involves strict risk management, setting clear entry and exit points, maintaining emotional control to execute trades systematically. I can't say enough about maintaining emotional control. It's probably one of the hardest things to do in trading, in my opinion. For me, it was. And the consistency is a key, being consistent is a key factor in distinguishing professional traders from amateur. Anybody can push a button. So stop losses, we're going to use stop losses and we're going to take profits. And those are going to be preset, predefined and preset bracket orders. In trading, a trading plan is a comprehensive set of rules and guidelines for making trading decisions, while execution is the process of fulfilling a buy or sell order. The plan provides the strategy and the risk management framework, and execution is the act of carrying out the strategy. So a lot of people enter the business and they don't have a plan and they just go crazy and it might be successful in the beginning and you might get lucky, but over time you probably are break even or worse. So a trading plan is a systematic approach that includes your objectives, risk tolerance, and the rules for entering and exiting trades. So your risk tolerance, I just want to touch on that really quickly. There's an amount of money that everybody has that if they lost it, they would feel uncomfortable. That's your risk tolerance. So if you're uncomfortable losing $1,000, then that's probably not a good stop. So your risk management business plan, it acts as a personal written guide to help you stay disciplined, manage risk, and achieve your goals. Key components include trading goals and your motivation, risk management rules, such as how much capital to risk per trade, the specific markets and assets to trade, entry and exit strategies, position sizing, and capital allocation. I realize that some of this is pretty basic. Some of you are way beyond this. So just bear with us for a little while while we get through these next couple of slides. So one of the things when you're first starting out is a very good idea is to use a trade journal. Trade journaling is it doesn't have to be complicated. You can write on a separate piece of paper what you took and why. Um, keep a log of that. Keep the date and the time because it's very helpful looking back on your losers and your winners, especially your winners, because once you identify an edge and you're doing well, you want to really have this biofeedback, something that's going to help you develop a winning attitude and making it routine. So identifying what criteria and what actions caused you to have a successful trade is going to be paramount going forward. So again, don't make it complicated. Just take time and review your trades, daily, and that's going to be very helpful in creating your business plan certainly and your risk management. Okay, so that's pretty much the gist of the introduction to risk management. It's basically like a, a primer for risk management. Nothing crazy, nothing too complicated or in depth. Just trying to impress on people that we're dealing with a lot of emotions. There's a lot of noise in the market, so there's a lot of things that we're looking at, especially with options, especially with these discords. There's just so much banter all the time, and it's very hard to trade successfully with all that. So we've gone together and we've suggested the following guidelines. Now, this is basic. This is a very basic example, sort of like a template that you could use. You're going to adjust this to your own personal risk tolerance. So the example for new traders would be buy at the market, and you're risking $100. And first thing you want to do is, once you've decided to take a trade, obviously you really want to put in targets, and we suggest the target of 20%. Oh, the slide that you're looking at is just really basic. It's so that you're gonna get into the market and you're gonna protect your capital, right? So at 20%, which is what we all suggest, to take a majority of your profits at 20%, so that you're basically covering your initial investment. So the second line, the stop loss, I it's very difficult to set a stop loss in options, especially when you're dealing with these low numbers, because you're going to get stopped out. So a lot of what I do basically is zero is my stop. So I'm looking for contracts that are under $1, even under 50 cents, so that I can do that comfortably. I can lose $50, $100 or $200, and it doesn't really bother me that much. Um, but this again would be another way to manage the rest of your position. It's especially with Yeats, you're really this you have to take 20% or even 25 or 30% from the get go, and it's about the runners. It's about the last two runners that you will make some decent profits if the market runs your way. So that's going to be really, really important. Cover your costs as soon as you possibly can, and then just let the runners run. Um, that's really been very, very profitable for me with this, especially with the seeds thing. It happens really, really fast. So I suggest putting in at least your target uh, orders at the time of taking the trade, and then the runners, you can see how it goes. Now, if it obviously if it goes in your favor, you can put in a stop loss that's reasonable, especially if you want to protect your profits. But I'm finding that if you do that, you ultimately do get stopped, and it it stops you short of making the really big profits that we're looking for. Okay, last slide, and then I'll stop talking. This is a slide for more risk tolerant individuals, the people that are willing to lose $1,000. I mean, technically, if you have a $10,000 trading account, you really shouldn't risk more than $100, 1% of the account when you're first starting out, 1% of your account on any one trade, and you should have daily limits, weekly limits, and monthly limits. That is, if for instance, if you lose $1,000 in a week, then on Monday, let's say you lost $1,000, you took 10 trades and you lost every single one of them, which is never going to happen if you follow Yeats or JC. But that cuts you off for the rest of the week, so that you're not building up a string of losers and wiping out your account prematurely. So again, guys, it's really about the runners. You're covering your costs, and then you're letting your runners run. One more slide, and then I'll shut up. This is something that I found in options that doesn't happen in the cash market. They really hunt stops very, very effectively in options. So this is a shot of Intel. I bought 5 contracts of Intel right before it popped. I walked away. I had a project that I had to take care of, and I put in a stop that I felt was going to be safe, 40 cents. And as you can see here, the low of the day was 40, and guess how many contracts traded at that level? Exactly 5, my 5. So stops are very tricky in the options market. The liquidity, if it dries up, you'll be stopped out. So that's all I got for right now. If you want to shoot me some questions, and if I don't know the answer, feel free to pipe in whatever you think could be a good answer to the question.
Floor is open for questions. Anybody have any questions, please go ahead and type it in. We got a couple typing right now, so we'll see what they gotta say. Oh, several people are typing now. Why is everybody giving such rational advice? That was
Yeah, it's not. It's again, this is the stuff that you don't want to focus on, but you really do need to focus on this stuff, maybe a little bit.
important. Something I like and I have learned too is I have separate accounts. I have one scalp account and I have one flow / degen account which I use. So like if you guys have the money or the possibility to do that, sometimes splitting those two, helps as well, like in your tolerance. But again, for new traders, I don't recommend that just because it's hard to manage a lot of positions. But sometimes with flow, you kind of gotta watch it. All like you see it and you're getting so upset that hey, it's red and this and that and this. There's a lot of things, emotional aspects going behind it. Whereas when you scalp something, it's just in and out. It's something that you can be in and out of fast, right? So, Swips is asking if you are a management consultant per chance.
I manage my own accounts. I do manage other accounts. I actually unofficially manage a couple of larger portfolios, private portfolios, and I manage my own accounts. So, but I don't manage other people. I've actually traded professionally for a bank out of New York. Back in the day, I was a broker in Manhattan for 15 years, 20 years, something like that. Um, right out of high school, I moved to New York City and I got a job on the floor, and I went crazy for about 15, 20 years, and decided to go out on my own.
Brad goes, do you have any stories about following your rules and you were so happy you did, or a story of you not following your rules and made you wish you did?
I mean, absolutely, every day. Every day I struggle to follow my rules. You know, the problem is that we're human beings are discretionary. You know, our brains aren't really designed for this kind of thing. Um, we look for patterns. We look for patterns from the past, and we decide that, okay, that happened in the past, and this is going to happen now in the future. And it just doesn't work that way in trading. I mean, that has gotten through us our whole entire lives, and it doesn't work in trading. So you really do have to change your thought process, your belief system when you're trading. You have to rely on. That's why it's so important to have an edge, because just defining an edge is going to make you confident. Just the mere act of defining an edge and backtesting an edge and understanding what your edge is capable of or not capable of, is so very important to your conviction. Becoming 100% convicted. I'll tell you a story that back in the day when I was trading professionally for a bank. This is back when we had the Deutschmark. I was trading Deutschmark, and the Bundesbank came in and devalued the Deutschmark by like 20% in one day. And I was short. I was short the market, and I was short about, I don't know, $750,000. This is back in the 80s, so the numbers are much, much smaller than they are now. But I was short the Deutschmark about $750,000, and I went to the bathroom. And when I came back, I was up $75,000. So that was that happened in a matter of minutes. It certainly could have been the other way around for sure. But and mostly I'm usually pissed off at myself for not presetting my target, for sure. I don't know if that answers your question or not. You are the story.
Yeah. So Sway asks, what if it hits your target but sell, and if you waited more could go against you but end up popping off? How do you manage timing on the market with levels or more such news and scalping? I think this would be something to do with runners, I think, just off of what he's asking.
Yeah, so I've had a lot of success with the JZ beam flow and the Yeats, just setting obviously the 20%, 25%, and then I just set orders at 100% and 200% and 300%. If you have a number of contracts, you have to have more than 3 contracts. So you have to trade 5 to 10 contracts to be able to have enough firepower to unload at different levels. If you're trading 1 or 2 or 3 contracts, you've got to pick a few levels and then forget about it. Trading the news is extremely dangerous, and there's no way to be consistent trading the news unless you're a seasoned professional that's been doing this for, I don't know, 10 or 20 years, and you've seen all the news that comes out. I mean, I was trading when in 1987 on that Black Friday or that Black Monday or whatever it was, where the market dropped like 50%. And a lot of you guys haven't seen these huge bear markets. So I I'd be surprised if there's anybody in this room that's actually seen a full blown bear market.
I'm sure there are maybe a few, right? So Sway, I hope that answered your question a little bit. And then I have another question. How many positions do you recommend managing at once in terms of contracts? That's a terrible question for me. I'm gonna let you answer that one.
I know. You're a little bit over the top. I'm up there too. I've got 82 positions on right now. But I have been trading for 40 years, so I have the ability to just sort of be okay with whatever happens. Um, if you're a new trader and you're just starting out, you really don't want to confuse yourself too much. You don't want to trade in an escalated hyper sense of, oh my God, am I going to make money today or am I going to lose money? Because basically what you're doing is you're frying your nerves. You're frying your last nerve. You really want to start off slow and you really want to see how the market responds to different things. You really want to take it slow because if you fry your last nerve, you won't be able to make a proper decision. If you're trading stressed out and you're trading with scared money, like money that you really can't afford to lose, your brain is not going to function properly. All your decisions are going to be colored by, I can't lose this money. It's fear of losing. Fear of losing is one of the top emotions in life, not just in trading. Fear of losing is probably one of the worst. It's the second to worst. The worst emotion is the fear of missing out. Fear of missing out is even a more intense emotion than the fear of losing. But they're both extremely pain. They can definitely dictate whether you are successful or not if you don't manage them properly. And that's what we're talking about here, managing emotions. Because risk management is 99% psychological.
Let's see. We have. Is it true what they say when you're trading professionally, you get detached from the value of money, you become numb to money in a sense? Swips is asking.
It depends on your account size. If you have $100 billion in your account, of course, that's true. I mean, you could take $1 million position right now, and it really wouldn't matter. 1%, right?
Yep.
So whatever your account balance is, 1% is the maximum that you want to lose in any given trade. Otherwise, you're going to be out of business in like 3 weeks. So yes, you build up a tolerance to losing only if you're confident and in your conviction. Only if you're confident about what you're doing. The way you become confident of what you're doing is you demonstrate profitability. You backtest your strategy, backtested and forward tested. I mean, backtesting is one thing. Okay, you're looking in history. You're looking in the past. What happened in the past? But the thing is, what's happened in the past has already happened, and that's not probably going to happen in the future. That's the problem with the human brain, is that we're always looking in the past to find patterns in the future, but the market is so dynamic. It's fractal, they say. It changes. It's like the weather. It's going to be sunny today, chance of rain 20%. Boom, there's a huge shower, and you just don't know what's going to happen. And so your brain really doesn't know how to deal with that. So yeah, it's a very good point. You really do have to become numb, but you don't want to overextend yourself in the beginning so that you actually can't make good decisions based on a trading plan. A good, solid risk management program has to be managed by a level brain by someone who's level-headed. And if you're running if you're running for your life, there's just no way you're gonna make the good decisions. You won't be able to follow your plan. Most importantly.
Yeah, just some of the dynamics in the market too, guys, just to post like flow and filters too. That's the reason why I think Brad, even sometimes for me, I make so many filters is because there's always something new and always something changing. People will start adapting, market makers and stuff will start adapting to what you're doing with flow. Like Unusual Whales was posted on news at one point, right? So there's an eye on Unusual Whales. So your rules and your bases are more important than filters and flow. I will say that right now. Filters and flow are great, but you got to constantly evolve to be able to keep up with the dynamic of the market, right? So we have another question.
That's an extremely good point right there. The market is constantly evolving. You need to take that seriously. You need to let that set into your brain, because you think about it. It's like, oh, the market is constantly evolving. Okay, yeah, it's changing. No, it is constantly changing in shape and size and dimension, and it's just the news and the flows and the liquidity, geopolitics. I mean, every single thing is it's the market is supposedly a method of discount. It discounts what's happening in the world. That's less and less today. It's more about how much money's washing the system. But again, that's an excellent point, that you don't know what's going to happen today, and until you wrap your brain around that aspect, you're going to be constantly trying to look for patterns that occurred in the past, and you just it's not gonna it doesn't work that way.
Yeah, very true. Someone's asking, what's your view on averaging down or rolling a losing option?
New traders never, ever, 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 ever add to a losing position. Never. It's plain and simple. Do not, if you're down on a position, get rid of it and go to the next thing.
Yeah.
Averaging down is for advanced trading. Someone who's got $100,000 in their account and they can take a huge drawdown. If you're averaging down on something and it's just a loser, and you just it's a downward spiral. Most of the time, intermediate to advanced traders, okay. If there's a rule in there that says that if your trade went up by 50% and now it's down by 50%, you're allowed to add one contract. I mean, only if your rule dictates and you've back tested and forward tested this rule and it actually works more than 50% of the time, then okay. But new traders, forget about it.
We have what is that? Doc says test of 6670. I have not been watching SPX. Yes, Ryan, we are recording this. Hopefully it recorded properly. I double checked it earlier, so hopefully that works. Sway says, how many contracts normal institutions trade on a day, and who are they hedging against, retail or other hedge funds, is the question.
I don't think I could answer that. A lot.
Yeah,
a lot of contracts.
Yeah, it's hard to keep track. I mean, your hedge or institutional traders could be like, people look at like $5,000 to $6,000 contracts sometimes and be like, oh, it's nothing. Yeah, it's most likely nothing, but you never know. You have no idea what the person behind that trade is thinking of, right? Like, you never know. Like, you can never say what someone's thinking when they take a trade, whether they're leveraging, whether they're trying to hedge, whether they're trying to average down. Who knows, right?
Also, they're not trading their own money. They're trading your money. They're trading other people's money. OPM.
Oh, yeah.
So the psychology is much different. It's completely different. if you're trading my account, let's say I have $100,000 in my account, you're trading my account, are you more worried or less worried?
Definitely less worried. 100%. All right.
But I've seen a lot of shit in my day, and these guys, they don't fuck around. Excuse my language. They don't mess around. They have very good reasons for doing what they're doing, and they're doing it for all kinds of reasons. A lot of these moves are hedges.
Yeah.
So you have to be really, really careful with this flow, because a lot of these guys are hedging, and the market makers need to hedge, and so it's their job to mess you up. It's their job to make it look like it's a real directional trade.
Yeah.
And a lot of times, I would say more than 50% of the time, it's not, especially with puts.
Yeah, on the basis of flow too, guys, don't ever beat yourself up if you can't find a flow. You have to keep doing it to be able to find it and learn about it. You have to keep at it. It's like it's a skill set that you have to keep doing and doing and doing to get better and learn at it, right? Like nobody's ever going to be perfect at it. There are a few goats that do it the best, and then there are people that just do it for the sake of doing it, right? So just keep at it. That's my best advice, right? We do have another question, actually. What was the question? Any tips or thoughts about cutting losers too early, or is this where I rule like if you're down 20%, just cut and move on and don't look back? My thought process on the cutting at 20%, not back in the, I guess if I say back in the day, Dwquack's gonna be like, what are you talking about? That's too young. But when I first started trading, right, like 20% cut loss it was easy to keep that loss. From what Dwquack said earlier, I think that it's depending on your account and how much you want to lose, what your tolerance is, right? Risk tolerance. That is up to, I think everybody's account is different. Like nobody should be following my risk tolerance, because my risk tolerance is it's 100% risk tolerance. That's a terrible way to trade, which is why I say you guys need to have your own risk tolerance, right? Anything you want to add to that, please?
Yeah, so that's a great point, and it's a great question too. One of the hardest ones to answer is where do I stop? Where do I stop out? And that's a very, very difficult place. Risk tolerance, obviously, the main thing there. How much you're willing to lose? How are you willing to be wrong? A lot of guys out there. Look, the human brain wants to be right all the time. That's all it's trying to do is be right. And it's all it's trying to predict what's right. And that's the main thing. And you want to notice that. You want to notice that you can be wrong. You don't want to be wrong. It's painful. You're avoiding pain. And you want to get out of the lizard brain. You want to get into to the technical brain. The brain, the part of the brain that's most creative and most dynamic and most intuitive. You want to listen to the voice, your intuitive voice. And the intuitive voice is much different. I'm going woo-woo now, guys, okay? Sorry. The intuitive voice is much different than your narrative, your ego voice. Your ego voice is, you're gonna lose. You're not gonna do that. You're no good. You're stupid. You're gonna fuck this up. It's screaming at you all the time, right? Well, at least for me it is. I'm a lot older than you guys, so I have a lot more shit. I have a lot more baggage. But your intuitive voice, it's so your ego voice is so loud that it drowns out your intuitive voice. Because the intuitive voice is something like this. You got this. Wait, what? What? Who said that? You can do this. You know what to do. What? Where'd that come from? Like who's saying that? Who's saying something positive? It's unbelievable how you're always listening to this chatter.
Yes.
On and on and on. It's just non-stop chatter. And that's the stuff you really have to train yourself to ignore.
Just on like a life basis too, right? If you're scrolling through, let's say TikTok or Instagram, what is more likely to stop you from scrolling? A negative message or a positive message? Most likely a negative message. at least for the majority of the humans. That's how that works. So that's a really good
You
point.
have to filter the noise. There's so much noise today, more noise. We have more information going on the internet than we ever have. Every single day it like triples. And you have to be able to know what noise you're going to listen to, what are you going to listen to, and what stuff you're going to filter out. But getting back to the original question, your intuitive voice is the one that's going to tell you. So I had
Hold on, Ducky, could you mute your mic, please, if you don't mind? Thank you, sir.
Sorry, my bad. I didn't realize it turned back on.
No, you go, brother.
So I had a position that I wasn't in love with, and there was really nothing I could do. It was just, straight down. It was sort of one of my larger positions, and I was really bummed out about it. And I just couldn't, like, uh, I, I tried to close it. I tried to get out at 50%. And I was like, 50%, that's okay, 50%, I'll get out at 50%. I had a bid at 40%, but my brain was stuck on, I don't want to lose more than 50% of this position. And I had my intuitive voice telling me, get the fuck out of this thing. Get out, just get out tomorrow. When you see this thing and there's a bid, get out. And I think it was a firm. It just went straight down, and I had a bid at like 45%, and I was like, okay, 50% is cool. I'll get this done. And that fucking thing went to zero. Are you listening to your intuitive voice? Or are you just paying attention to all this freaking noise and you can't see the forest through the trees? You really got to start honing in on your intuitive voice. Today is a perfect example. I mean, we had this market where the SPY was like hovering at the highs, and it's just not doing anything. We've had this incredible bull market that's just won't stop. And there has to be some down days. And if you listen to your intuition today, you might have said to yourself, you know what? I'm going to take some profits today, or I'm going to cut these losers. I'm going to cut a bunch of these losers because who knows what the hell is going to happen. So I don't know. My advice is, if you're not following a plan, you're sort of at the effect of the market. So the market is designed to take your money. And if you are not trading and with rules, and you don't have a plan, and you're just going on your basic instincts, and you're watching all this noise and listening to every Tom, Dick, and Harry about whatever the fuck they're talking about today. Excuse my language, guys. I'm sorry. I hope no one's offended by my language.
Sorry, Cleon, could you please mute your mic as well, please? Sorry about that. Go ahead.
You just, you've got to try to listen to what your intuitive voice is telling you. And if you're uncomfortable, you won't be able to get the message.
Yeah. Also, guys, I can't stress how important this is. I'm going to tell you guys, and maybe you guys don't agree with me, but it is okay to be wrong. We learn by being wrong. I can't stress that enough. Like, I'm wrong 95% of the time. Maybe 5% I'm right. But it's so important to be wrong. That it's just how you learn. We're human. Humans learn from mistakes, right? Repetitive action and mistakes. So it's good to be wrong. So just a tidbit on my part, right?
That is so true, and that is so important. And Jay-Z, you're one of the most humblest guys I've ever met. I mean, I have never met anybody more humble than you. You have such humility that is so important in trading, because it's important to be humble when you're winning, when you're making money and you're profiting. It's so important to be humble, but it's even more important to be humble when you're losing. Think about that. Losing is part of the game. How can you be humble when you're losing? Not beat yourself up. It's part of the game. It's part of the drill. If you have an edge, you have conviction, you have confidence. if you're trading without an edge, that's not possible. You can't have conviction. You can't have the level of conviction that you need to pull the big trades when you see them. You won't be able to tell. And you're so beat up and your nerves are so fried because you're doing all kinds of different stuff. You're not paying attention to rules. You're going on instinct. You're going on noise. And then when a really big trade comes up and it's like, wow, I have like really good confidence, conviction on this. You may not take enough, or you may not take the trade, or you may not make the right decisions and targets, and it's just it's a whole package. You got to be able to think properly in order to manage your risk. And it's just being humble is like one of the most important things of being a trader. Not only when you're winning, especially when you're losing, because we're always beating ourselves up. See, that's the ego. That's feeding the ego. Oh, look, see, I freaking lost again today. I lost another $100 again today. I can't fucking do this. This is stupid. That's the ego talking. And if the ego's in charge, you're fucked.
Appreciate the kind words, sir. Nothing special.
Sorry, I don't mean to be so blunt, but sometimes I feel like I have to be.
No, you're good, but nothing special, like I always say, right? Just an average trader. Ducky says 20% stop loss feels super tight. I usually set 30 to 50% depending on my exposure. More contracts, more conservative stop loss, fewer contracts, cheaper, 50%. So again, that's something, if you like it's a good example of how he does it, right? So his account, obviously, depending on what his account is, he can manage the type of stop loss, right? So again, every account will differ with stop loss, correct? So that was a good point that Ducky made, right?
That's a very good point, and that's exactly how I do it. My stop is normally 0. Like, I'm not buying these contracts that are $300, $400, $5,000. I'm not buying these huge contracts. I'm buying contracts that are typically in the $50 range or less. If I have strong conviction, I may take a $100 contract or maybe a few $100 contracts, but I'm not. There's no way. And then obviously you can't put it in a stop loss. It's very difficult to put in a 20% stop loss because on the opening the freaking premium's gonna swing 80% or 100% until the liquidity comes in. So unfortunately, stops and options are super tricky because you will get your stop hit. So it takes a lot more management in order to minimize your risk that way. Duck is bang on, dead at. That is the way to go. $50, your stop is 0. Take a few contracts, put in some targets, go on to the next.
How do you deal with FOMO against players in the game when they flex their wins, which turns you into a chaser?
Yeah. Again, the most intense emotion there is. Very, very challenging to manage your FOMO. How do you manage that? Well, I would say with a trading plan. Because look, guys, if you have a trading plan and you're supposed to do A plus B plus C. If A plus B plus C adds up, then D, which is take the trade, right? It takes a lot of the emotion out of the strategy. It takes a lot of the emotion out of your psychology because you're following a predetermined plan. So a lot of traders that I've seen in my lifetime, everything's discretionary. Well, I saw that the S&P was going up, and this was, this market was dropping, so I figured, no, you didn't figure nothing. You've got to determine that your edge is an edge. You have to prove that your edge is an edge over a long period of time. And I know a lot of y'all don't want to hear this. I don't like saying it. This is not a game. This is a business. So if you're following a predetermined plan that manages your risk, there is no FOMO. You're taking the trade when A, B, and C line up. Does that make any sense?
Yeah.
So you shouldn't have FOMO if that's the case. FOMO doesn't enter into it. Now, realistically, do I wish I had 100 contracts of Beyond? I have 5 contracts of Beyond, and I made a bunch of money, and I'm freaking happy because I followed my rules. Do I wish I had 100 contracts? Sure, of course. Who doesn't? But that's not the game.
Also, think about FOMO and people flexing their gains. Something that you gotta realize is that most of those people that flex gains, they don't flex their losses. A lot of people lose, like me included. Like even if I'm green and there's something I'm losing on, because I have over 100 contracts open. So there's something you always lose on. There's people on Twitter that'll post weird games and stuff like that, saying that this is what happens. This is what happens. No. People lose all the time. You have to lose money to make money sometimes. That's just how it is. As long as you're making more than you're losing, you're still winning. That's how you gotta look at it. So
that's very well put. I agree with that 100%. And we used to have a thing that there's guys out there that sold at the top and they bought at the bottom. Half of them are lucky and half of them are liars.
Let's see. Oh, Sway was not here for the question either. Was he here? No, he left. All right. So next, there's I think a couple more questions here. So do you pay a lot of attention to your fill prices? I find that on some trades I teleport down 15% off the bat.
I do that, but then I sometimes miss the trade. I'm willing to miss a trade, though. I do that. If I'm seeing the S&P is dropping precipitously, which it is, I'm holding back. If something comes out on Yeats especially, I'm buying more time. I'm scaling back. I'm getting on the bid. If the market is 510, I'm not taking the 10 today. I'm sitting on the 5 because I can buy 20 contracts for $100. So I'm happy to take that. And the loss is the loss. It's $100. That's my stop loss.
Dude,
so I'm all over
buying time is so underrated. It is so underrated, guys.
Yeah. Just because the Yeats comes out with a 1024 or a 1031 doesn't mean you can't look at the 1121. Look at the 1121. Look at the December contract. I mean, a lot of times you can go up a strike or two and pay the same price, then you have more time. I mean, obviously you have to look at the chart. And that was another thing that I really wanted to impress upon you guys is that you've got to look at many different sources of information. You can't just look at the flow and say, I'm going to take that. Based on, it's on the flow. It's on the Yeats filter. Our JC said, take it. You've got to look at a chart, and you've got to look at the news, and you've got to understand and sense what the overall market sentiment is. Today I wasn't aggressive for obvious reasons. I knew that the market is bound to be weak today. So I was not aggressive. In fact, I was aggressive in taking my profits. There's time to be aggressive in taking profits, and there's time to be aggressive in taking trades. And no one's going to teach you that. The only way you're going to realize that is if you start tuning into your intuitive voice and you get the flow, not the flow of the contracts, but the overall flow, the money flow, You're taking into consideration the bond prices. You're taking into consideration gold and silver, Bitcoin. You're looking at everything as one big flow. And then over time, you'll start feeling the flow. You'll start feeling the cycle of the market. And you walk in on a day like today, and you'll say, you know what, it's not making new highs. It's sort of waffling at the high. Let's be conservative. Let's be careful today. And no one can teach you that. But you've got to listen. You've got to tune out all the freaking noise. There's too much noise out there, guys. Too much.
Ryan goes, separate logic brain from emotional brain totally makes sense. Zigford goes, this woo-woo is helping me synthesize my feelings about my Mariners losing Game 7. I just wanted to be right. The cat emoji, when I put streamer mode on, it disables the names on these. So the cat profile picture says, thank you, this stream is gold, wish I joined early, gonna have to watch later. Yeah, it should be online on YouTube, hopefully after market hours. Duck, I don't know why Duck brought in Campbell's just crushed my soul. Ryan said, do any of the big dogs in the server feel comfortable sharing their rules or risk management strats? You can post that in the jungle. I'm sure somebody's happy to help you out with their rules and risk management. I think that overall consensus from this, at least from this stream, from what we discussed, or what Dwquack discussed, was something that you should look into. Do it on your own account, right? And then Holdeen goes, do you think it would be a good thing to set limit orders at 30 to 50% for the initial rip to pay for the whole trade? I've done it for the past week and backtested. It seems to hit most of the time.
I would do that. There's no reason why you can't put in a bracket order when you pull a contract. There's no reason. I just wouldn't put in a close stop. I mean, those stop templates that we talked about are just that. It's just an example. I mean, you're going to adjust the prices according to what you think is best. If you have a $10,000 account, you can afford to lose $100. I would do that. I would pull a contract and I would cover your costs immediately if you can. However you want to do that, with a 20% or 25% or 250s or 75%. And then I would and I would really look at how far can I push these runners? How long can I hold these runners? Because I have runners that are up, I don't know, 3,000%. Unfortunately, it's only one or two contracts, but this is where the money's going to be made. When you're able to, the exposure in the market, this classic Warren Buffett, exposure to the market, the length of time that you're in the market is where the big money is made. Not that dicking around, scalping bullshit back and forth, frying your nerves every freaking day and tearing your hair out. That's not what trading is. If you're doing that, stop it. Stop right now and write a plan or steal a plan. There's plenty of trading plans out there that you can use. And practice being true to yourself and your rules. See, the thing is no one's watching you. So we're not true to ourselves. We're the worst. We have the worst relationship to integrity with ourselves. I'm going to stop smoking today. Yeah, right. Okay. I'll stop for one day and I'll be smoking again tomorrow. You know what I mean? We let ourselves down all the time. It's not a big deal. But I say it is. It's a big deal, especially in trading. You've got to follow the rules. Just prove to yourself that you can actually follow rules, and watch your brain try to be discretionary. Oh, well, just this one time I'm going to take this trade. I mean, we're in this for the long haul. If you're discretionary, you're going to be out in 3 weeks or 6 weeks. So The answer to the question is put down a plan, put in a bracket order, cover your cost so you have 2 free runners, 1 free runner, and then let it, if it's a leap, I have a leap on American Battery 2027. It's up like huge. And that was the only reason it's up huge is because I covered my cost and I have 2 runners. And it's the expiration date is in 2027. Time in the market, Warren Buffett.
Yeah. Good. Some great information again. Holdine asks, do you have any books that help you find what noise to block?
Bro, that is a new book on me because the noise is overwhelming. I've never been more overwhelmed with noise ever in my life. It's crazy. And I get what the other guy is saying, the people flexing their profits in the jungle. I mean, I would really take that with a grain of salt. The books out there, I mean, honestly, I would read a book on meditation. I'm serious. I would read a book on meditation, learn how to meditate if you want to tune out the noise.
Sorry, I'm trying to ban this fake Axel that just joined the server.
Well, I appreciate everything you're doing here. It's really amazing, guys. We're so blessed with Jay-Z and all these guys they're just so knowledgeable and they're so freaking smart. They're much smarter than I am, and I'm just amazed
I don't know what you're talking about. Smarter than you.
I want to thank you, JC, from the bottom of my heart because all my accounts are up and they're up enough to raise eyebrows. In the 3 months that I've known you, it really is a testament to you and really your generosity. Like you give it away for free. You're just trying to help people, and I sensed that from the first time that we talked, and it's just really it's so incredible to meet somebody like you.
I appreciate the kind words, man. Just like I always say, just an average trader. I'm glad it's helping everybody out. That's something that I was aiming to do anyway. So that was the whole goal of this. Any more final questions before I'm sure Dwquack has to go do other stuff as well. He's a busy person, right? So if anybody has any more questions, right now I would take some final questions. Anything? Nothing? If not, I will just take a quick bathroom break and we do some flow stuff. That's something we can do. I see Mr. Bean here as well. Hi, Bean. Good to see you.
I'll be here longer today
Oh, sweet. Nice.
for the whole thing, probably.
Awesome. If there is no more questions, I'm going to stop the recording for this. And then I will work after I'm done with this. I'm gonna work on probably trying to get this uploaded onto YouTube as fast as possible. I'm gonna try and hit the gym again. I've been eating too many cheeseburgers, so I'm gonna try and do that. But yeah, if there's no more questions, guys, that'll be it for this part of the stream. Dude, thank you so much for this. This is super helpful. I'm sure every single person over here is super grateful that you did this because this is awesome for everybody. It's good for me to hear it again and again and again, not just from myself telling me this every single day, but from somebody else as well who's been doing this for longer, right? Your knowledge is actually unmatched for like most of it, and it's just awesome. This is great to hear from you about all this, right? So, guys, big shout out for this stream, right? I appreciate you so much, man. Thank you very much. And I will stop the recording over here.